Today's financial advice is sponsored by Endeavor Private Wealth. Well, Chris McGee, managing partner at Endeavor Private Wealth, is joining us for our segment on investing. Chris, good morning.
Good morning.
Well, always a pleasure to have you on the show.
Thank you.
And so, Chris, to begin, excuse me if I can talk. The economic news the last few weeks has been dominated by problems in the banking industry, spurred by the failure of two regional banks. I know it's still very early in the investigation and analysis of what happened and to see if the problems run deeper, but I'm hoping you can share your thoughts with us and shed some light on the situation.
Yeah, that's a lot to cover given the amount of time constraints, but I would like to discuss what investors should be aware of. So let's begin with understanding the difference between idiosyncratic risk and systemic risk. Idiosyncratic risk is specific to an individual company or a group of companies sharing similar business characteristics. Systemic risk is the opposite. It's related to the overall risk that affects all companies and the entire financial markets or system.
And so what was the idiosyncratic risk that Silicon Valley Bank faced and couldn't overcome?
Yeah, Silicon Valley Bank, or SVB as it's being referred to, catered to tech startups and investors who funded them, exposing the bank to a unique risk that other more diversified banks or traditional banks wouldn't be exposed to. When these depositors all at the same time started running low on cash, they needed to withdraw some of their funds from the bank. And that forced SVB to sell off from their investment portfolio at a loss to meet those demands. Word of SVB's distress quickly spread and resulting in more and more depositors withdrawing their funds from the bank and its ultimate collapse.
So when you say the bank incurred losses on its investment portfolio, was it investing in risky assets?
That depends on the type of risk we're talking about. So the majority of assets comprising SVB's investment portfolio were U.S. government treasury obligations, arguably one of the safest investments in the world from a creditworthiness perspective. However, treasuries, like all fixed income securities, are subject to duration risk, and there lies the problem.
And so what is a duration risk?
Duration risk is the effect that changes in current interest rates have on the value of a bond or bond portfolio. Over the past year, the Federal Reserve has been increasing the federal funds rate in an attempt to lower inflation. So think of it like a teeter-totter. If interest rates are rising and the underlying value of the bond falls. Conversely, when interest rates decrease, the value of the bond increases. Long-term bonds are more sensitive to changes in interest rates and decrease in value more than shorter-term bonds when interest rates rise. SVB found itself in the position of having to sell off its long-term treasuries that it holds in its hold-to-maturity portfolio, which otherwise would have isolated it from losses associated with duration risk.
So even very safe, conservative investments can create problems in unusual situations.
They can, and there are other problems as well.
And what other type of risk contributed to the problems at SVB?
I think speed risk would be worthy of mentioning. The speed at which information is disseminated over social media and accelerated in heightening people's fear. That may contribute to a herd mentality in which everyone wants to get out, and it could escalate to a contagion risk, in which is when really bad things happen. Think of it like a COVID pandemic or a full-blown banking crisis, which spreads with great ferocity.
Well, Chris, yes, you were right. There is so much to cover in the short time we have. But before we have to go, are there any final thoughts?
There's a good side to speed risk, and that is the fact that the Federal Reserve, FDIC, and the U.S. Treasury all acted with great speed in containing the situation and preventing it from turning into a systemic risk.
All right. Well, Chris, thank you so much for joining us today. We always appreciate your time. And of course, to learn more about Endeavor Private Wealth, visit endeavorpw.com.